Good morning, everyone. I'm Andrew, and I don't want to work anymore. And here on my channel, I've been forward testing and back testing an ICT first presented fair value gap strategy that I developed, and I will show you the numbers right here. We have 211 trades over 73 trading days, 129 wins, 82 losses, a 61.1% win-loss ratio, 5,789 points, 79 points per day, and a 4.5 RR. And if you want to see how this strategy works and how we deploy it every day, go check out this video up here. And we will get into the charts here quickly. Actually, we got 2 minutes. I had a comment yesterday. One of the guys has been saying that this only works on trend days. And well, this is yesterday's price action, but I think every day is a trend day. It just depends on when you find the trend, because like if you caught this move right here with the strategy, so here's the first presented fair value gap. We had to wait twice for us to tap into it. So this is the first gap here. And as you see, we tapped into it once and then twice and then broke above it and then dumped off. But you know, this strategy, if we went short, even if you went short right here and your stop loss went there, that would be your first position. And then, oh, that's too far. And then you went short again, you would have been allowed to go short right here. So there's your second position. And then you could go short again. There's a small gap there, but you weren't allowed to use it there. You would wait till, say, about here. You can put a third position on. And then, let's see here. You would, let's see. How do I show you how to do this now? Right. So you would have another fair value gap right here. So you can move your stop loss to here. No, hold on. Yeah, so you would bring your stop loss to here after this guy formed, and you would survive this retracement, and then you would have another fair value gap form right there. And so you can move your stop there, and then this one forms, and you would bring your stop to here, and you would probably get stopped out on this one. But that would be, you guys can do the math, I'm not going to do it, but that's 194 points plus another 136 and another 81 points. So if that's not good enough, I don't know what to tell you, but the market has opened. Let's get into the action here. Our first opening price was about there. We're going to make that pink. Yesterday's closing price was 18,925. So we're in a premium there. We'll make that orange. We're going to go electronic trading hours. We have already taken out Asia low, London high. I have marked out already. And then, yeah, I think we're going to take out, I think we're bullish today. I really do think we're bullish today. Let's see. Yeah, I think we're going up, guys. I think we got to come down first, like we're doing here. And then we're going to rocket up. So on the 5-minute chart here, we have Yeah, we do have this 5-minute fair value gap over here that we can tap into. Do we have any more? Maybe on the 15-minute. Yeah. This 15-minute gap here. These are also relatively equal lows that we can take out before going higher as well. Hope everyone's doing good. I'm happy for the comments, good and bad, on the videos, guys. Someone's saying this, you know, a lot of you guys are actually saying this only works on trending days, and I'm giving back a lot of points, but looking at my account here, I'm still positive $700 from when I started, and I'm only trading one contract at a time. And we are about 14 trading days into this strategy, so almost 3 weeks. And I haven't been profitable in a strategy in a very long time. So I am not complaining about the numbers. When I see that I can make an average of 79 points per day over 73 trading days, like, this average is good, guys. If you got a better one, I would love to hear it, because even these results keep me up at night and excited. So I'm hoping to go live with these numbers after another month of forward testing, I would say. Yeah, I'm profitable. I wish I was more profitable since I started going live. I was forward testing this strategy since March 26th, and my numbers are still positive 721 over 44 trades. I think that's 14 trading days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading days. Only, 16 days per. All right, here we go. Let's go long. We are gonna go long. So we got about 15 seconds left on this candle. If you watch the strategy, it's over here actually. You'll see why I do it like this. I'm not waiting for a retracement because you don't always get one. We're in. Like I said, I'm not super confident in this working out right off the bat. I would have loved to come down here first and take out these relatively equal lows and this 15-minute fair value gap. Make it another gap here. Funny enough, yesterday after I ended the stream, I got into another trade. Where was it? It was on this super long trend actually. I set a limit order. I think I set a limit order right here and I chickened out. I was in it. I put a limit order right on the 50% of this gap here. And I got in, I held it for like 30 seconds and then I bailed on the trade. So we're approaching London highs here. Oh, we're already reaching for yesterday's afternoon highs. Since we made another fair value gap, I can move this stop up. I'm waiting for a new 5-minute candle here to form. No gaps in here, guys, so I don't think we have to worry about any retracements. No deep ones anyway, although we are quite extended in this range. I'm gonna draw out our first gap. Yeah, we might consolidate here for a little bit. I think we could still come back in here. Stalling out here, just poked above that London high. I'm gonna make another fair value gap here. Get ready to go long. May have moved that stop a little prematurely here. Okay, we're in on a second position. This stop should be actually 5 points below this, 68. Doesn't look good though, guys. Seems like we're stalling out after taking out the London highs. We're quite overextended here in this range. I think we're going to have a small loss. We might not get the trend day everyone's looking for until after we retrace back, maybe into the opening day range, new day opening gap. I'm getting bored and pushing buttons, and I shouldn't be. That stop loss needs to stay where it was. Look at a new 5-minute candle opening up here. Yeah, it really just looks like it's going to stall out here, guys, and turn around on me. What do you think, guys? We're going to get support here on this top 4 fair value gap, or are we going to break lower? Come back to the original fair value gap of the day, the first presented, and then continue higher again? Let's see here. What does it look like on the 5-minute? Uh-oh. This looks bad. Lost one position. We're going to come down and take out this other one, and if we don't, then I made a mistake on moving my stop loss on the initial position because I got cheap. Okay, that's the first loss of the day. 7 o'clock. We're going to drop down probably into the first presented fair value gap. What is the fib? Let's throw the fib up here. Yeah, that's 61.8% retracement is right at those relatively equal lows. I'll probably keep an eye on this from the kitchen and look for an entry. There's a quick trade in here if you guys wanted to go short and target the fair value gap, you know, that's in there for sure. Okay guys, what's going on? I had to end the stream. I had to get to work, but I ended up I kept on keeping an eye on the computer from the kitchen back there, and I saw this setup, and I want to walk you guys through it because it was a really great trade. I'll just minimize myself here. Yeah, just as if I was in the trade, but this is a screen recording. So what we had here, because I ended up getting stopped out right here, and then this traded up, and we created a fair value gap here. And I don't know if you guys remembered, but we took out London highs over here, and then up here we took out, actually it was New York afternoon highs from the day before, from yesterday. And then we kind of like meandered around in here, and we came up, we created this fair value gap, and then I couldn't see it from the kitchen, but we created another one right here. And actually, I think that's why I entered here. So this candle came down into the middle, and then this candle pushed right through it. And before it even closed, I put in my first position there, and my stop loss went up here. Now, from where this video starts is where we traded down and created another fair value gap, and I got in late, and now this second position, its stop loss would have to be, actually I got in early on this one, and this stop loss should actually have gotten up above here, but I got a little excited and I put it with my second or my first position to reduce the risk, and lucky enough I will push play here, and we continued further down. So price pushes down, and since we created another fair value gap here, our stop losses can now go above that candle. So I'm locking in profit on position 1, and the risk now on position 2 is just here, and it's only, I think, 30 points. And we got the profit starting to roll here, and we are now, so this is our first presented fair value gap, and we have now officially closed beyond it, and we are pushing now down to these relatively equal lows that I had mapped out earlier. And I'm going to pull this up on the chart. So we get down, we push even all the way into the new week opening gap almost. And I closed up the trade obviously a little bit early because I was having breakfast, and I met my profit objective here. I would have liked to keep trailing the stops, but my intuition was correct just to take profit there, because we ended up turning around here. This ended up being the low of the day, I believe. So I'll stop that video, and we can now go to trading view, and I'm going to talk about what happened here on this leg and what you should look for. We have our ICT kill zones and pivots indicator on, and it just shows you the sessions, and then it draws out the highs and the lows across. And so when we opened up, we took out the London high. Our first presented fair value gap was right there, and we kept on going. And then I put another trade on after this fair value gap here, which at the exact same time took out our New York afternoon highs of the day before. So this is now when I moved up my stop. I got stopped out here, but this is kind of like one of ICT's models and when to predict reversals. I'm going to just remove this so you guys can see, but that last fair value gap that I acted on was this one here. And so that would have been the second one of the day, I guess third, but these two are connected, so we'll discount that one. But actually, sorry. After I got stopped out, we went higher still, and we created another fair value gap here. And this is super important now. After we've taken out those highs, we have this fair value gap, but this candle and this candle inverted. So if you haven't heard of an inverted fair value gap, that is it right there. You have a bullish one, and then you have two candles close beyond it in the opposite direction. And at the same time, I'm just gonna, I guess I gotta keep it there. At the same time, we had two more created. One right here, and one more right below it. Okay, so we have a bullish one and then two bearish ones. When you have this overlapping, that is a really good sign that we're going in the opposite direction. And what I ended up doing was setting a limit order right in the middle. I may not have put a limit order in, but what you would want to do ideally is right in the middle of this gap here, or sorry, if you wanted to, you could enter in on this candle when it closes beyond the first fair value gap, or you can draw out with your fib 50% between the first one. So that's going to be here to there. You just miss it actually at the 50%, but if it comes up into that gap, you are good to go. And we got a really great trade out of that, as you can see. So I had 3 positions on. I had my first one enter in, let's just say the first one went there, and then my second one would have gone here, and I don't think I got a third one on, or did I? Maybe I did have a second one. Anyway, you know what I'm saying. This is the best way to see a reversal. You have to take out, you got to take out the highs, or on the opposite side, you got to take out the lows. But also, I targeted on the 5 minute. Where is it now? Today's price action. We ended up right in this fair value gap. I had this targeted as where I wanted to exit, was right inside this fair value gap, and at the same time it lines up totally perfectly with the Fibonacci at the 62% retracement right there. So you got two confluences in there. Oh, wait, sorry, and I forgot the third one, which was these relatively equal lows. So you got 3 reasons for price to get down here as an exit. So I hope this was insightful. I'm taking words straight out of ICT's mouth, but I hope you found this helpful. And I'm going to just end the video right here, guys. So I'll catch you tomorrow morning trading again. Have a good night.